You need to take a white sheet of paper and say, what is the world going to look like? Not what has happened and what does the world look like. Now, many people are saying, well, wait a minute, isn't Bitcoin a hedge against inflation? Isn't that the reason to own it? Why are you such a big proponent of it when you think there's actual deflation happening? Well, if you look, when we took our first exposure to Bitcoin in 2015, it was $250, and traditional asset managers and others in the ETF space were making fun of that decision. And so we paid very close attention to the daily moves. And at the time, Greece was threatening to leave the European Union. And we were worried about, a relapse into the European sovereign debt crisis. Well, if you were watching Bitcoin very carefully back then, you saw it nudged up every time that there was a flare-up around Greece. And that gave us confidence that Bitcoin might be a risk-off asset as well as a risk-on asset. And that was confirmed last year during the regional bank crisis, when regional banks imploded and Bitcoin went up 40 to 50%. So I think this recognition that, and I know I've pivoted here a little bit from that paper to the topic at hand, but I think that realization that Bitcoin is not only a risk on asset, a technology, as technology is, but it is a risk-off asset in terms of counterparty risk. There's no counterparty risk here like there is in the banking system. I think what you're alluding to is, if you look at the S&P 500 and NASDAQ, and you look at what's at the top of each of those, the companies there they've hit that level because of past success. And if the world is going to be disrupted and, the traditional world order is going to be disintermediated, that's probably not the place to go. However, we've been fighting this battle for 10 years, including Bitcoin. And we are providing exposures to the new innovation, the way the world is going to work. And what has happened, and it's unfortunate, I think it's the most massive misallocation of capital in history, is after the tech and telecom bust, and even more so after 08, 09, there was a move towards risk aversion or risk mitigation. And what did that mean to the traditional world? It meant, let me get close to my benchmark. Let me get close to the S&P 500. Let me get close to the NASDAQ. In fact, I've seen conversations among portfolio managers in other firms where, the benchmark is their bogey. And shall I be 10 basis points above on this name or 10 below? That's a ridiculous way to invest. It's absolutely ridiculous. You need to take a white sheet of paper and say, what is the world going to look like? Not what has happened and what does the world look like. And especially given how quickly these technologies are moving. And the great thing for ARK in terms of everything that we do, and I know it's true for 21 Shares, but they only do digital assets. But the great thing for us is there is a new investor who understands and accepts this notion that volatility is part of the price you pay for this new asset class. And many, and we've been referred to just our basic ETFs and innovation as a new asset class as well. We're not a new asset class. These are equities. Bitcoin and digital assets, that's a new asset class. But now we have an investor that understands that volatility is part of what you need to expect. I'm not saying they're comfortable with the downside volatility. They love the upside volatility. Volatility is a very good thing on the upside. So I think this whole space, this new asset class, is helping investors understand what we've been trying to communicate for the last 10 years. Bitcoin, of course, but also through these other innovation
Cathie Wood
platforms.
attributes Bitcoin's rise to national currency devaluations. Cathie Wood called Bitcoin an insurance policy against rogue regimes and horrible fiscal and monetary policies. ARK Invest CEO Cathie Wood has said that Bitcoin's rise to a record high this year has been in part due to national currency devaluations around the world. Bitcoin has gone up by more than 130% in the past 12 months, hitting an all-time high of $73,000 last month, and now it is down to 67, but alongside a wave of demand from spot Bitcoin ETFs in the United States. Cathie Wood touted a separate narrative in an interview with CNBC, stating that Bitcoin is an insurance policy against rogue regimes and horrible fiscal and monetary policy. I think this is just to say that countries' mistakes and rogue regimes should not be responsible for your currency going down. There is something else going on around the world, Cathie Wood said. There are currency devaluations taking place that people are not talking about. The Nigerian currency is down 50-60% in the last 9 months. Egypt just devalued by 40%. Argentina continuing to devalue. So the rise in Bitcoin is a flight to safety taking place, a hedge against devaluation, a hedge against a loss of purchasing power and wealth. 2 weeks ago, Cathie Wood reiterated a $1.5 million price target for Bitcoin, labeling it as a financial superhighway. We saw this even here last year in the United States. Regional banks have imploded and Bitcoin went up 40%, she said today. Bitcoin does not have a counterparty risk. This is both a risk-on asset and it is risk-off. I remember we got in at $250 when Greece was threatening to leave the euro. The launch of spot Bitcoin ETF in the US was expected to bring a new level of legitimacy to cryptocurrencies, but according to the head of Goldman Sachs Wealth Management, the asset class has not yet reached a level where the banks feel comfortable recommending it to clients. I think it has mostly to do with its volatility, and investors and the old money, they like stability and comfort. Bitcoin certainly does not bring you stability because it can go up, can double in a year and also lose half of its value in a year, and that is certainly not what most people want with their money. We do not think it is an investment class yet, says a Goldman Sachs Wealth Management guy in an interview with Wall Street Journal. We're not believers in crypto, she added, comparing the excitement around the asset class to a tulip mania of the 1600s. And while her position on the matter risks costing Goldman clients potential gains, while also appearing out of step with markets, they remain resolute in her options of digital assets, preferring that clients stay fully invested in the US stocks and minimize their exposure to China and other emerging market countries. The Goldman Sachs analyst says that despite Bitcoin's run up to nearly $74,000, they continue to hold a negative impact of Bitcoin and the broader crypto market, noting that it's nearly impossible to accurately value cryptocurrencies which don't produce earnings, cash flow, or dividends. While no one really knows why Bitcoin is going up so much, I think it has a lot to do with a lot of demand and less supply. If you cannot assign a value, then how can you be bullish or bearish on something, is what they said. While many central banks and the government as flawed and the main source of economic struggles, they maintain that US government policymakers play beneficial roles in society despite their many wrongdoings. She also holds a negative view of crypto due to their use in various crimes such as ransomware attacks, saying that the rule of law and system of checks and balances do matter at the end of the day. They feel like Bitcoin is too volatile to be a reliable medium of exchange, and that is unlikely that it will be used broadly. While Bitcoin still has minimal uses in everyday life, it has become very popular among traders as its price has more than doubled since the critique was published, and this has made the Goldman analyst even more skeptical about King Crypto, leading her to harden her stance on the asset. Bitcoin creates absolutely no value in any shape or form, is what she said, and while crypto proponents claim that it will lead to a decentralized financial system with a greater level of democratization, and the main decisions end up being driven by a few controlling people, is what she said. Despite her disdain for cryptocurrencies, Musawwar Rahmani said that she sees promise in the underlying blockchain technology and thinks that the movement to tokenize real assets will lead to a more efficient financial system. She also thinks that the central bank digital currencies could eventually be useful, and she also acknowledged that while gold does not produce earnings and is hard to value, it has historically been popular as an investment investment and for use in jewelry. At least you can hold on to physical gold and store it, and you cannot do that with crypto, is what she had to say. Anyway, we don't encourage people to own gold, is what she said. Musawar Rahmani's opinion of Bitcoin and crypto stands in stark contrast to ARK Invest Cathie Wood, who recently said that its price is rising because it is a flight to safety against devaluing fiat currencies during an interview with CNBC. Cathie Wood described Bitcoin as both a risk on and risk off investment and said that while institutions are finally getting in on the Bitcoin action, average investors are being presented with an even more important opportunity. There's something else going on around the world, is what she had to say. There are currency devaluations taking place that people are not really talking about, citing the fact that Nigerian currency and Egyptian currency have lost roughly half of their value against the US dollars in recent months. Cathie Wood noted that in these instances as well as others, it has been deliberate government interventions, not direct market forces, that have negatively affected the exchange rate. In a recent interview with CNBC anchor Andrew, renowned Bitcoin and chief executive at ARK Invest Cathie Wood shared her take on why Bitcoin has been going up parabolically lately until the recent price fall took place. Sorkin assumed that Bitcoin has been moving in line with price curves of the Nasdaq 100 index, which makes Bitcoin a risk-on asset. Cathie Wood shares a take on Bitcoin's growth, answering a question about the possible reasons for the recent Bitcoin price hike to a new all-time high of $74,000 in mid of March. The renowned investor mentioned that Bitcoin has been acting as a response and a hedge against various fiat currency devaluations that have been happening, and this is what has been pushing Bitcoin up higher and higher, apart from the driving power of the spot new Bitcoin ETFs now, said Cathie Wood. So that's it guys from here today. Please subscribe and do hit the like button.